The oil cartel led by Saudi Arabia has suffered a blow with the announcement that Angola, the continent's second largest oil producer, is quitting OPEC due to differences over production targets. The decision was taken at a session of the Council of Ministers, chaired by Angolan President João Lourenço. The Organization of the Petroleum Exporting Countries, OPEC, is an organization enabling the cooperation of leading oil-producing countries to collectively influence the global oil market and maximize profit. It was founded on 14 September 1960 in Baghdad by the first 5 members: Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela. The 13 member countries account for an estimated 30% of global oil production. The decision comes after the producer group lowered Angola's oil output target last month as part of a series of cuts led by Saudi Arabia to help prop up prices. Angola's oil minister, Diamantino Azevedo, said the Organization of the Petroleum Exporting Countries no longer serves the country's interests. It joins other mid-sized producers, Ecuador and Qatar, that have left OPEC in the last decade. In a presidency statement, Azevedo said Angola was gaining nothing by remaining in the organization, and in defense of its interests, they had decided to leave. Angola protested OPEC Plus's decision to reduce its output quota for 2024, which led to the country's planned withdrawal. The disagreement contributed to the postponement of OPEC Plus agreement on further output limitations and its November policy meeting. Angola became a member of OPEC in 2007, but since then, the two countries have argued over attempts to reduce the production baseline, which serves as the basis for calculating each member's output quota, to account for reductions in the nation's production capability. There has been relatively little investment in either new or mature exploration and production fields as a result of a large decline in oil prices and limited foreign dollars available in the Angolan market. The upstream sector of the oil industry in Angola is primarily focused on the exploration and production of offshore natural gas and crude oil. Offshore fields provide around 75% of the world's oil production. Light sweet crude oil from Angola has a low sulfur content and is ideal for processing light refined petroleum products. The 50 blocks that make up the oil-rich continental shelf off the coast of Angola are likely to treble in size when fresh blocks go up for auction in 2025. Although the country is a leading oil producer in the region, it currently imports 80% of its demand for refined petroleum products, including gasoline, diesel, aviation fuel, jet B for gas turbines, oil fuel, asphalt, and lubricants. Only 20% of refined products are sourced locally. The refining of crude oil and distribution of refined oil remains well below domestic demand. To reduce the country's dependence on imported refined petroleum, the government of Angola has plans for the construction of national refineries. In 2016, when oil prices were particularly low, OPEC joined forces with 10 other oil producers to create OPEC+. One of the members of the expanded group is Russia, which also produces more than 10 million barrels a day. The price of crude oil crashed in 2020 because of a lack of buyers, as countries went into lockdown. OPEC Plus had to boost prices by cutting production dramatically by more than 9 million barrels per day. Following Russia's invasion of Ukraine, the price of Brent crude soared to more than $130 a barrel. However, by March 2023, it had fallen back to a little above $70 a barrel. Angola's decision to exit OPEC is a sign of how some producers are being squeezed by the oil industry's current dynamics. Angola was once one of the more promising oil-producing nations, but in the last 8 years, its output has dropped by about 40% as multinational oil corporations have tightened their belts and decided Angola was not a desirable place to invest due to the aging of its oil fields. Nigeria's output has decreased for similar causes. In June, Prince Abdulaziz bin Salman, the Saudi oil minister, pressed member nations to accept reduced quotas to bring the limitations into compliance with actual production capability. However, from Angola's perspective, there was no purpose to remain in the cartel, since a lower cap would discourage the kind of investment that Mr. Lourenço has been attempting to draw. At the November meeting, a group of countries, including Iraq, the Emirates, and Kuwait, all agreed to new cuts. In countries where oil revenue is essential for government budgets, more frustration with OPEC's cuts may surface. Angola's departure does reflect disgruntlement by other members of the group about carrying a quota they feel constrains their growth. By leaving OPEC, Angola will gain more flexibility in setting its own oil production levels and strategies. This allows Angola to potentially increase its oil output and pursue its own economic interests. However, Angola's departure from OPEC may also have some negative implications. It could result in reduced cooperation with other OPEC members and potentially limit Angola's influence in global oil markets. The 13-member OPEC group has suffered from several membership terminations since it was founded in 1960 to coordinate the petroleum policies of its members and provide member states with technical and economic aid. Indonesia quit in November 2016, followed by Qatar in January 2019 and Ecuador in January 2020. Gabon, a permanent member since 1975, left the group in 1995 but rejoined in 2016. However, some small producers have also joined OPEC in recent years. Equatorial Guinea became a full member in 2017, and Congo became a full member in 2018. Due to Angola's decision, there may be a misconception that the market is self-sufficient and that additional regulation of the global oil market is not necessary. The key query is, in the broader framework of the world's crude oil markets, what does Angola's pullout mean? The market bears would be ecstatic, to start. Disunity within OPEC Plus might lead to a deterioration in the group's pricing support. It is not necessary for individuals holding short positions or wagering on a decline in the price of oil to overstate the significance of this occurrence. Oil prices are currently oscillating in the range that they have been due to the wider demand dynamic. Regardless, the kind of output cuts that OPEC Plus is implementing can only have a limited effect, and possibly only for a short period. This is because OPEC Plus will inevitably lose market share when non-OPEC production, particularly American production, rises in 2024. Bear in mind that Angola also has projects for its oil in the future. Angola's most significant current investment initiative is its 2019-2025 bidding strategy. This strategy intends to auction off 55 oil and gas blocks by 2025. In 2019, Angola offered 10 oil and gas blocks for public auction. Eni and Total Energies won operatorships. 3 blocks in the lower Congo Basin and 6 blocks in the Kwanza Basin were allocated for public tender in 2020. Operatorships were secured by MTI Energy, Somoil, Grupo Simples, Alfred Petroleum, and Angola Integrated Services. The 2021/2022 bid round was launched in February 2022, involving 8 blocks in the lower Congo and Kwanza basins. Proposals for this round are still being evaluated. The 2023 auction includes 4 blocks in the Congo Basin and 8 in the Kwanza Basin. The final auction, to take place in 2025, will allocate 10 pre-salt blocks in the deepwater Kwanza Basin. However, since the beginning of 2023, Angola's oil production has fallen short of the target set by the government and is declining compared to 2022, which is severely penalizing economic growth. Combined with the fall in Brent prices, this underperformance is weakening the external accounts of the country, which is also dealing with particularly high external debt repayments. Despite this underperformance, the government remains confident in the sector's ability to increase its production in the short term. Their appetite was already confirmed in September when the ANPG granted 2 new operating licenses for blocks that contain considerable oil reserves. The oil sector will therefore return to growth in 2024. With all this said, do you think Angola has made the right decision to quit OPEC? Let us know what you think in the comments below. Do not forget to like this video and subscribe to the New Tourist channel. Turn on notifications too so you get notified whenever we upload videos like this. Thanks for watching and see you in our next video.